This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. In fact, the S&P 500 now at new historic highs. Also, we are not that far from new historic highs in the Dow Jones futures. Actually, most of the gains took place in the weekend trade on very limited news. However, we did see a little follow-through strength with the U.S. durable goods report coming in higher when a decline had been anticipated. So overall, I'd have to say that futures are overperforming the news, which is a sign of strength. So I would look for higher prices today and higher prices longer term. Even some of the lagging indices, such as the NASDAQ and the Russell, I think will again regain their footing and will at one point down the road become the leaders again. Either way, the bull market is intact and we are expecting higher prices across the board in stock indices. Over in the currencies, after the dollar index made a 1-month high, some pressure coming in this morning. I find it rather unusual that the dollar index is lower, even though we did have durable goods coming in stronger than expected. So the dollar ignoring some bullish news, that would be a sign of weakness. So from here, I would look for lower in the dollar. Also, the pound a little bit lower, this after mortgage approvals in the UK coming in on the weak side. Also seeing the euro a little bit better, even though it is widely expected that the European Central Bank at their upcoming meeting on June 5th will add more accommodation in one form or another, possibly through lower interest rates. So I think the euro is going to have a very difficult time advancing. Also feeling that the yen will resume the downtrend. This after the Bank of Japan suggesting that earlier that they may hold off on more accommodation, but the general market view is that at some point they will be forced to add more liquidity. So the yen will probably work lower from here and probably lower longer term. And we also believe that the pound, even though it's a little bit lower today, will be the leader to the upside, and that is a trend that is likely to continue longer term. Credit markets narrowly mixed. Still feel that the main trend is higher for the entire complex, especially for the 30-year bond. This is a trend that is likely to last, I believe, for quite a few more months. So look for higher prices in treasuries. 30 years should be the leader to the upside. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.